What are your expectations for the trading day ahead and some of the issues you're keeping an eye on today when it comes to the equity space specifically?
Thank you very much. Well, for our outlook for the trading day today, we still expect a continuation of the trend that started on Monday, taking into cognizance the deadline for CBN for banks saying that they have to reduce the exposure of margin to 10% of their loan books. So that has called for panic. I mean, we don't know if it's just selling pressure on the exchange or people are waiting to see how that plays out in the market. So pretty much today, we still expect that the market will trade probably sideways or will still go down today.
Yep. Well, in the meantime, we've got mid-tier banks stealing quite a bit of attention. And to a large extent, if you look at the likes of Access Bank, it's because they haven't released results yet. Many saying it's as simple as, Access seeing it or seeing Access Bank keeping with the sector trend that's emerged over recent weeks. What are you expecting out of Access Bank in particular?
Well, for Access Bank, it's one of the mid-tier banks that we are still expecting the Q2. For other mid-tiers, we've seen what they've done. And the general line is that it's been challenging to grow the top line. I mean, that's the turnover and the gross earnings. But on the bottom line, we've seen that most of these banks have dealt with efficiency issue coming off for what they experienced in 2008 and 2009. So most of them are focused on risk management and how to preserve their risk asset generation. Some of them are being cautious now. So for Access, we pretty much expect what we've seen in line for the other mid-tier banks. Our expectation is that if they're going to grow the top line, we're expecting a maximum of between 7.5 to 10%, but we expect them to do like 20% upside on the bottom line.
When it comes to a merger and acquisition activity, I mean, what are you looking at coming out from Access? Do you see them playing within the merger and acquisition space pretty aggressively? Because we know that this is a bank that is trying to be a GTB effectively.
Yeah, for Access, going by the history of the bank and the ambitious management that is sitting on the helm of affairs of the bank, we know that they've always been aspiring to be one of the big banks in the sector in Nigeria. But now, size is no longer the issue. It's about efficiency. Gone are the days that people are looking at assets, how big was the bank. But now, the issue is now efficiency. Having said that, we still feel they will also be looking at probably doing an M&A. They will be looking at cherry-picking one of the unhealthy banks, and that is possible because now that the CBN has given a deadline of September for all the deals to be consummated. So we're expecting that probably during the next few weeks, we'll have a direction as to which bank Access Bank is talking to at present. And also, from the feedback from management, we gather that they are looking at expanding their spread to the other parts of the country, which is in line with their business model. They're looking at growing the deposits, just like the bank, the model like some of the top-tier banks are doing. Like you said, that they're aspiring to be like a GT bank, spreading their tentacles, growing the deposit base, and using that to finance some of the transactions of risk assets to their large corporate clients.
Certainly, Access Bank not alone in that regard. I mean, Diamond Bank also being noted for the fact that, the bank's NPLs and its loan book has shrunk quite considerably and reflecting some repositioning at the bank. We know that the bank is embracing retail more than it was a year ago. What are you making of Diamond Bank's strategy?
Well, the Diamond Bank strategy is clear enough. They are just trying to maintain their status quo, playing safe in the mid-tier market and probably extending their tentacles to the retail market. Now, we're seeing that coming up from 09 position, they've been able to grow their margin, their net interest margin from like 7% thereabout to like 9% now. And they are still looking at consolidating their position in the retail market. Now they are into credit cards. They are extending credit to the retail clients.
Do they have the balance sheet to actually support that kind of growth?
Yes, that's a good question to ask. But we will say if they choose to really go big on the retail side, then the balance sheet will need to be beefed up. And the last feedback we got from management is that they are also talking, I mean, they're looking at the options of doing a deal. I mean, maybe purchasing or acquiring one of these distressed banks. But in all, I think they will also need to be efficient and they will focus more on efficiency. If they feel there is need, probably doing their business analysis and they still have opportunities to play with this balance sheet that they have now and still maintain that margin, because what is key to them now is growing their net interest margin, which has gone from like 7% thereabout in December to 9.something% as we speak. And also the cost of funds have dropped. So if they are able to focus on what they have and still achieve their aim, then they will not do it. But if they're looking at the size and probably growing the balance sheet as well, they would definitely be looking at doing a deal.